Well, hello, everyone. Welcome to Trading a Smaller Account. It is a Friday, March 6th. And man, oh man, I hope you guys are buckled up because we have an absolute ton to cover today. As I was looking for example trades to place in this crazy time that we are in the world, politically, in the markets, all of it. There were kind of opportunities all over the map and kind of in some areas where I least expected it. The other thing, so we're going to look at some different types of strategies today, some like just flat out kind of sort of bullish, some that are neutral, some that are kind of sort of bearish. And so we're kind of walking all over the map and just kind of walking through the fields and seeing where there might be opportunities that we can take a short-term perspective on, because I don't know about you, but is anybody feeling like they have a really good feel for what's going to happen in the next 6 months? Okay, well, I'm not one of them. So I'm kind of, and I don't want it to seem like a gambling analogy, but I grew up playing a lot of card games with my families, and we talk about holding your cards close to the chest. So in other words, kind of taking a shorter term view. Okay, and we have no less than 8 stocks that have either hit targets or hit exits. So, we hadn't had, a lot of losing trades so far in this account this year. So we have a couple that we can look at today and then go back and see how we did. And then we've got a bunch of new example trades to place. So that's kind of what's on the menu today. If you are not following Mike Fairborn and I, and we've got Mike in the chat, he's a friend and a fellow coach and understands every strategy that we're going to be talking about today. And we're going to be talking about buy right covered calls. We're going to do an iron condor trade. We're going to look at long verticals. We're going to look at short verticals. So yeah, we're going to be busy bumblebees here. So at Barb Armstrong CS is my handle. Mike's is at Mike Fairborn CS. And just keep in mind, I've rattled off a lot of options trading strategies, and we do trade a lot of options in this class. Know that options carry a high level of risk and aren't suitable for all investors. You have to apply for option trading privileges with Schwab, and not all will qualify. We use the paperMoney software application on the thinkorswim desktop platform, which is a brilliant place to learn and to figure out your trading strategy, and then to make sure you understand how the platform works. Okay, there are some nuances and differences with our short vertical or long vertical strategies. It's important to remember that short positions will never be assigned early in paperMoney. That can happen in a live account. The same thing goes if we do a buy right covered call where we're selling a call, that won't be assigned early. And being assigned early, with a buy right covered call isn't necessarily a bad thing. It just is a thing that we need to be aware of. So if you've never been to a live event, we have one coming up next weekend in Dallas. I believe the registration, pardon me, is already closed for that. But if you live in the Dallas area and you show up, you can register on site. And then we'll be doing a 2-day event in Denver, back to Dallas for an advanced options event at the beginning of April, and then in Boston. And Ben Watson will be at all of these events. I think that Kevin will be at these next 3 as well. I will not be going back out with the travel team. I've been out with them a lot so far this year, but I'll be back out in May. But if you've never been to one of these events, I would highly recommend it. Okay, so let's have a quick look at the markets. And as you guys know, Kevin Horner does just an absolutely fantastic job 4 days a week at the market open with his Trader Talks webcast. And Friday is the only day that is an archive, so you have to attend live. If you missed James and Kevin this morning, make sure you put it on your calendar for next Friday. So the S&P 500, it kind of broke down below this diagonal support level that I had drawn. We're now below the 100-day moving average, so, some people may have spotted Chicken Little out there running around, but I don't think there's a cause, for major concern. I don't know why this is being so sensitive. But a not insubstantial drop today, but the candle pattern we're looking at is a hammer pattern, which is encouraging, which is saying this may be finding a new support level. If we come and we look at the NASDAQ, which is our tech heavy index, we're seeing it, after a really nice run to the upside, it's been kind of consolidating and starting to move in more of a sideways pattern. But I see it as a little bit more of a pennant pattern in that we're still seeing higher lows, even though what we've seen lately is similar highs. And some might say, well, I'm not looking at it that far out. And what I'm looking to see is a break. Okay, I can draw. Okay, just a minute. Grabbing the right drawing tool is always helpful. A short-term kind of pennant pattern and looking for a break above that, which we do not have yet. And then when we come to, let's look at the Dow first. And, the Dow dropping, so are we surprised? No, it's down over 1% today, and it too now trading below the 100-day moving average, kind of breaking a support level. Because this 100-day moving average has acted as support in the past. And when we come and look at, we could look at our small caps, like that, some might say that's the most attractive looking line of the bunch in that it's come down this 100-day, it's flirting with, but it too, a diagonal support break here. And we'll see by the end of the day if it looks like this 100-day is going to move, is going to hold. When we look at the VIX, man, we haven't seen the VIX this high, but, twice in the last year or 3 times. So it had a spike in October, it had a spike in November, and man, it's spiking now. Like 26 is the highest we have seen it, since that couple of days back in November. And so what does that mean to us as traders? Well, what it means is that we may have an opportunity to sell. And even if we're trying to look at shorter time frames, because volatility is higher, it may be an opportunity for us to take advantage of that volatility. And who knows, it could keep going higher, but if it comes back down and then we get the advantage of that volatility crush or compression of volatility, that could work in our favor. So let's go, we're going to go back and forth between the new and those that have hit targets or exits. But when we look at Nvidia, it's been the talk of the town for a long time and is, a pretty heavy hitter in both the NASDAQ and the S&P, but it's been kind of going sideways, hasn't it? And it's kind of hit a top up here of 195. It hasn't been above 195 since early in November. And then it's come down here once, twice, 3 times lately, 4 times, and the last time it didn't quite make it down to around 170, but hasn't really traded below 170 for a while either. And so I thought we would do an iron condor example here. And the idea with an iron condor, and what's the appeal of an iron condor? And when I first started going to live events as a client back in 2011, I met these people who said, oh, I love doing iron condors. And I didn't even know what an iron condor was. It sounded, I've been posting on X. So that was my EOG chart, I think. But the idea here is that if we think that this 170 support level will hold, if that's our expectation, we come down here and we sell a short put vertical, where the expectation is that the stock will stay above. And then we come up here because we believe it will stay below 195 and we sell a short call vertical. And if we have something, and I think I looked at a 250 wide spread on this, or we could do a $5 wide spread. If we have a $5 wide spread, our max risk is $5, and yet we're getting paid a credit on this side and on this side. And it's not possible come expiration date that it both be below both strikes on the short put vertical or above both strikes on the short call vertical. So we're kind of double dipping is how some people would look at that. And this we call an iron condor. Why, I don't know, maybe because you have this wingspan and you want to place your trades outside of that wingspan. Okay, but so we're going to start off with an iron condor. And we haven't done a lot of these in the last year in this account because, the market's been pretty bullish. So, that's a big part of the reason why. I don't know why this is. So let's come to our trade tab. And I like to kind of look at both sides. So could we even just go out 2 weeks and get enough premium? And we said we wanted, yes. Okay. Yep. Is that better? Just a sec. I'm trying to brighten up my screen again. Let me just bring up my drawing tool because the last time it was a drawing tool issue. And when I closed it, the screen brightened up. We're going to roll with it. Okay. So yeah, sorry about the dark screen. I'll click something and it will get bright again. But so we're going to look at, we wanted something above 195. So we're going to come to this, and we have 123,000 contracts. To say this at a 2-cent bid-ask spread, like to say this is heavily traded is an understatement. This early in the day, it's already traded 74 million shares. And then we're going to add to this, and that's paying 47 cents on a 250 wide spread. If we come and we make it 195 and 190, oh no, 195 and 200, we get 81 cents. So we don't get double. So you have to decide, well, we aren't getting 96 cents, we're getting 80. And if it's the same thing on the put side, then we might be better to do more contracts. But if we want to just keep it simple, 195 and 200, so we get 80 cents. And then let's look at the other side, at the put side, and we wanted to be 170 and then 165. And again, lots of contracts. So we get paid if we did a $5 wide spread and we made this 165. Well, it's not letting me do that. Well, let's change it. So it's not letting me change this. So let me just put the whole thing together as an iron condor, but we're definitely getting enough on each side to make it interesting. So I'm going to come to sell an iron condor. And then I've got 195, 175. Now I don't want this to be 192.50. I want it to be 190. So I've got something weird happening with my screen having gone dark. Yeah, let's take a quick break because I want to be able to fix this. So I'm going to log out of thinkorswim and then come right back in. Yeah, I'll be right back. All right. I'm hoping that this will be better. So I'm just waiting. I've signed out of thinkorswim and back in again. And let's look at again. We wanted to do this 195 strike. We're going to do an iron condor. So we're selling an iron condor. And then I want to change these strikes here to 170. And now I still have this issue. So I will put this in after the class. Okay. And I don't know why this has decided, because I was mocking up all these trades before the class and they were working just fine. And all of a sudden, you know, something has gone awry and I'm not quite sure, you know, what it is, but we shall persevere. So, and then I'll review this iron condor on Monday. So let's go and look at a trade that we did on VLO. And then we're going to look at some other stocks in the energy sector. So with VLO, we had done a couple of trades. So we did a stock trade and a long call vertical. So, and we put both trades on the same date back on February 13th. It hit our stock target the day before yesterday. And then it hit our strike targets just quickly for the iron condor on Nvidia, 195 and 200 on the short call side, 170 and 165 on the short put side. And it's not a paper money limitation. You know, there's some glitch happening in the system. But with VLO, it hit our stock target and it also hit our long call vertical target. So if we come to the monitor tab and we come to our account statement and we look at VLO, like 8 positions have hit our targets. So, oh, we're in the wrong account. That's not helpful. Okay, so let's come out 30 days on VLO. So somebody in one of Connie's classes yesterday was saying, I don't know how to calculate return on risk on a position that I've been in, or like if we had done 8 or 10 trades on VLO, you could just go back to the beginning of the year and see every trade you had done. But I just want to look at these last 2 trades. So on February 13th, we bought 25 shares for $199.95, and they were sold on Tuesday for $221.06. And so with that position, so here's our stock position. And just in the interest of time, you know, we're taking this, we're subtracting this. So with VLO, we made $21.11 a share times 25 shares. So we were up 527.75 on that. And then on the long call vertical, you know, we bought it for $280. We could have lost $280 per contract, and we did 2 of them, so we could have lost $560. But we ended up making money on this, and it was $425. We subtract the $280, and that came to $1.45, or $145 a contract times 2. And so we made $290 on that. And then to calculate our return on risk, that would have been 145, which is what we made, not counting commissions, divided by the 280 we could have lost. That was 52%. Okay, and this one, you know, you'd be saying, well, we made $21.11 on a $200 investment. So we made about a 10% return. I prefer to think of it when you're buying stock as a return on investment. And it was just over 10%. 10% would have been, you know, 199, 1999, and we made 2111. Okay, so that's that one. So that was VLO. Now, on the downside, because if we look at the good, I need to balance that with the not so good. Okay, now it looks brighter again. So maybe now when we go to place this next trade, it will work. So with Newmont, we put in a swing target and then a stock target. And I think when we got to the swing target, we may have exited, but we put these trades on, well, just a minute. No, we put them on February 27th, and these did not go according to plan. Okay, and we did a stock trade and we did a call. Okay, and neither one of these worked out. And how bad was the damage on these? Well, on Newmont, we bought 38 shares here. Now we had some other trades that worked out nicely before, but on these last two trades on Newmont, we bought 38 shares at 130 and we were stopped out at 118.96. And so, if we do the math on that, and we did the math on the winners, I know sometimes it seems nicer to do a head in the sand approach when you don't have a winning trade. But I think what you want to do is go back and just make sure that you did what your rule said you were going to do. So we're subtracting. And with Newmont, we ended up down by $11. So this is on our stock trade. We ended up down by $11.66 a share times, so that was losing, times 38. So there went the profit from the VLO trade, because we ended up at 443.08. And that was a loss. And then on the call, because we were doing a swing trade on the call, we had put in an exit if it lost 50% of its value. And we got out when it lost about 50% of its value. Okay, on this one. And we just did one of these because we were risking $465. So this is on the call. And this was a long call. So on our call, we lost $231, which was about a 50% loss. So, and that turned out to be $231. So we were down by $674 on those two trades. But on the VLO, we were up by $817 and change. And so kind of we ended up ahead by a little bit, but you can see our account is down over $1,000 this week. So it's been a rough week. And this is when we're really grateful that we position sized appropriately. Right? Right. Okay. So let's go back. Let me erase that. Okay. So let's see if I can put in that Nvidia trade. And one of the things that was appealing to me is that I only went out 2 weeks. Now we could go out further, but we're going to be in the midst of major time decay here. So if we look at selling our iron condor, can I adjust these? It's still not letting me adjust these, which is very frustrating. So what I could do instead is we'll just do a short call vertical here. And if it's not letting me adjust these for some weird reason, I'm just going to put in a first trigger sequence, and then we'll do, so that's the call side, 195. We'll just leave it at 197.50. We're going to do 2 of these. And then we're going to do 170. We're going to actually make a credit spread sandwich. So, Nvidia, 170, 165. Only it'll end up being 170, 167.50. So we're risking $2.50 less 43 plus 49. 43 plus 49 is 92 minus 250. So we're risking 158. And how much can we make? We can make a max of 92. Well, then now it's saying, 89. So if I can make 89 and I'm risking 250 minus 89, minus 89, I'm risking 161. Like that's a potential 55% return for a trade we're only going to be in for 2 weeks. So we're going to go ahead and we're going to place this trade. And then on Monday, I'll put exits. Okay. Yes. Oh, I have it lopsided. Let's come back and make both of these 2. So if we're risking $1.61, we could actually do 3. Because if we do 3, how much are we risking? Well, 618, that's a little too rich for our blood. We're trying to be, we're following our rules. Position sizing is important, right? Right. Yes, Debbie, I caught that. Thank you. You guys are paying attention. I love this. And our goal is to exit these when we've got 80% of our max gain, but we'll put that in on another day. And it's not, my drop down menus aren't working, so I'll put it in the iron condor bucket. Okay. Okay. So, sometimes we get served up. You'd almost think it was Friday the 13th, but that's, but like the system is practicing for Friday the 13th. The other thing that I thought would be interesting to do today, and I went to the energy sector because the energy sector has been strong. And, when you people will ask me, well, how did you come up with these choices? Well, we're in a snack bracket where we can, afford to do a stock position that's up to $5,000. And I want to do a buy right. Yes, I was going to do $5 wide spreads. And the reason I chose not to was because the system wouldn't let me do it today. So that's why we did a 250 wide spread, but we got paid a higher premium as a percentage for doing the shorter spread, but then we'll have higher transaction fees because of it. Tim, I don't know that we'll get to the MCD, cat, and apple trades today. We will do those Monday, okay? Because I only have 45 minutes. And I wish I could do everything, but I can't. Okay, so let's look at Devon. So our choices were kind of Devon. So I looked for stocks that were, uptrending in the energy sector because that sector's been strong, and that were, might have had a bullish entry today. So Devon was one. Halliburton is another. And, so when we look at Halliburton, it kind of pulled back, and then we had this hammer. And then, we have another hammer. Now, it's still below the 30-day, so some might say, yeah, I don't like the look of that one as much. But, some could argue we should wait till Monday. Some might say, yeah, I see it as a valid entry because we're up on the day before. And some would say, well, the conservative person in me would like to wait, and that's okay. So we may do 2 of these. So let's go and look at Halliburton first. Now, so the idea here, or Devon, sorry, the idea here with a buy right is, we see this stock that's been uptrending. It's up 26% year to date, and it's only March, 5th. And, so it's kind of, we're still seeing kind of higher closes here. We're seeing higher lows. So it came back and it's moving up. And you might say, well, we're seeing a doji pattern today, and we are, but is it at a support or a resistance level? Well, it might be, but kind of not really yet. And so what if we went out just 2 weeks? I can get rid of that line. What if we went out just 2 weeks? It's trading at 44.95. What if we sold the 46 strike and we bought 100 shares of stock? And the goal is to get called out. Thinking energy is strong. I think this stock could continue to be strong. And if we did this at $46. And you might say, well, like it's already at almost 45. That's only $1 of profit. That's not much. Well, it's 2%. It's a little bit more than 2%, because if it was $100, and you got $2, it would be, 2%. So it's about 2%. And then you're getting, if you sell the call, you're being paid for agreeing to sell the stock at that price. So if we come out to our trade tab, and again, if we're just looking for a little win, we've got 305 contracts. We've got time decay working in our favor. Because when we look at our time decay here at 46, it's $5 a share. If we come out to April and we look, well, we don't have a 46 strike, but we have a 45 and a 47.50, it's only 3. And if we had a long call, we'd rather sell the long call and get less time decay. So we'd come out to April. But when we're trying to take advantage of time decay and the fact that volatility is high right now, if volatility goes down, that will benefit us. So we're looking to, they call this in the parlance of thinkorswim, buying covered stock. So the most we can make on this is $2, and let's call it $2.04 a share. So I can make $2.04 a share. That's the most I can make on this investment of $43.95. And this is a 2-week trade, so it's very short time frame. That's a 4.6% return. So it's not too shabby. And if we said, well, where would we put our stop? Well, if we said, well, this 30-day moving average seems to have been acting as a support level. So what about if we took that 42.80 and we went 2% below that? So let's put our stop at 41.94. And if the system accommodates, so I'm going to make this a first trigger sequence, right click, opposite order, make this a market order that's good till canceled, disappearing, reappearing sprocket. May the trading gods be praised. It looks like it's letting me do this, 41.94. So how much are we risking here? 41.94. So we're risking about $200, and there's no guarantee if Devon were to gap down, we could end up out at a lower price, right? Right. And we can make $2. So we're kind of risking 2 to make 2. And this is a 2-week trade. And are we investing over 5,000? Nope, 43.94. So we're good there. Most we can make 206. Our stop is at 41.94. So it kind of checks our boxes. So we're going to put that in our buy right covered call bucket. Okay. Okay. Yeah, so CS Mellon said that he was able to do a $5 wide spread on the Nvidia Iron Condor for 220. It means you're risking 280. Like that's, for a 2-week trade, that's an some might think it's interesting. Some might say, yeah, too risky, but trade it in your paper money and then we can track and see how we did. And so if we come and we look at Halliburton again, oh, well, now it's, we've got a bearish candle there. So we'll wait and we'll come back and look at that again on Monday. Now, another one that I thought might be interesting to look at was EOG. So again, this is another one in the energy sector. Since last April, so it's almost been a year in the making, we have this big double bottom, and I had posted this on X yesterday, and then it broke out, and today it's continuing to move to the upside. So if the market were a little more settled, what could we do? Well, we could say this is about a $25 range. So a technician might say, I'm going to add this 126. I'm going to put a target up here around 150. You know, and if we look at some of the news on EOG, you know, adjust price target to 158, et cetera, like lots of moving price targets up. And so we could do that, but there's so much global uncertainty, you know, it might not work. But could we do a long call vertical at, say, 131? Let's see what the strikes are. And for this, maybe we want to come out a little further. And we do have some volume here, not a ton. Now, if we come out 14 days, I mean, it's got to move and move quickly, but we have $1 wide strikes here. You know, but this candle is saying, hey, it opened higher, closed lower, it hit 134, has pulled back a little bit. Like maybe for this one, we do want to come out to April where we've got lots of contracts and we do this 130, we've got a 40-cent bid-ask spread. And we do this, so it's 235. And if we wanted to make 50% on that times 1.5, say when it gets to 352, we want to exit. Single order, first trigger sequence, right click, opposite order, 352. Oh, I put a comma in there. System is very detail oriented. Make that good till cancel, confirm and send. So our max loss here, 460, it's saying we could make up to 540. We're saying, hey, if we can make like $200, 250, we'll be happy campers. And then we'll look at these, and if it, if it's down 50%, then we exit. The reason we don't put in an OCO order is because sometimes when the market first opens, there's a lot of volatility. And so I've been in my live account, you know, when I've done these trades on occasion, not the exact same trades we're doing in here, but when I've done a long call vertical, I've sometimes been stopped out for way more than a 50% loss. And then the market settles down and I wouldn't have been stopped out at all. And so, you know, when we're doing these example trades, I'm trying to give you kind of life skills that teach a man to fish, right? So, and somebody asked what, you know, how much does this move in a day? $3.59 is the range. And so it can move a fair bit in one day. You know, and so that you might say, well, then I'd like to do that 2 weeks. The thing is, if you're wrong and it doesn't move up within that very short window, you know, then we're snookered. Okay, so that's EOG. So we've done a long call vertical on EOG. We've done an iron condor on Nvidia, and we have done a buy right on Devon. And I know we just got out of VLO. But here's one that will wait for Monday, because if this starts to bounce on Monday, one might argue that this could be a nice bull flag pattern setting up. And then we could do another one ATR with a long call, or maybe a long call vertical, or a short put vertical. But at this moment, we now have no positions on VLO. I think we've hit, March 20th. Let's see if we still, I think we're out of the long call vertical on VLO too, aren't we? Yeah. Okay, so the other trades, and I'm not going to be able to go through the details on all the math, but let's have a look at the other ones, the ones that went our way and the ones that didn't. So SanDisk, I mean, look at the move this stock has had. Even year to date, it's up over 100%. And we had done a short-term trade that worked out. The long call vertical actually worked out well. I don't know why this is so sensitive today. But out loud. But we had put a stock swing target on here, and that did not go according to plan. We got stopped out on that at 548.56. And we lost $91 a share times 6 shares. So we lost $549 on that. Now, AU on Monday, we had decided to take the money, cue Steve Miller, we took the money and ran. And we were glad we did that because then it gapped down the next day and kept on falling. So that turned out to be a good decision. And on AU, on the stock, we made $602.32. On the call, though, we didn't get out, which was a mistake on our part. Like, why did we leave the call? I'm not sure. But on AU, and we've done several trades on AU, we bought this, well, we placed that trade last Friday and we left it on, and we were stopped out on Tuesday, and we took a 50% loss, about a 50% loss on that one. So we were down on AU $312. So that was a 53% loss on AU. Okay, Sandesk, MPC. So this was another oil, like energy stock. And this was one that we did well on. We had the 200 and the 210. So we did a long call vertical here at 200 and 210. I think it was 200 and 210. Yep. And we put in 2 different expiration dates, and it hit both of those. And so when we look at MPC, you know, because it went up so dramatically, it hit both our targets. Now that might have been a bit of a paper money fill. And by that, I mean, if you had placed this trade in your live account, you may or may not have gotten out. And I think with that one, our target was a 25% gain, because we said the market is so volatile, particularly the energy sector. You know, we put this trade on Monday. We got out of the March 20th one the next day for about a 32% gain. We got out at the market open. So that was when that volatility was high, and so it triggered that exit for us. And then on Wednesday, we got out of the April one. And the April one, we got out with a 22% gain. Okay. Annie M, we're out of both of those trades. They hit either a target or an exit. So we've looked at SanDisk, we've looked at Marathon Petroleum, we've looked at Newmont Mining, we've looked at Valero or VLO, we've looked at Anglo Gold, AU. The only one that we didn't look at was BA. And Boeing, we exited the long call first. So we got out of Boeing, the long call vertical, because this just wasn't going according to plan. So we exited the long call first, and then our stock hit our stop, and we ended up out of that. We had 21 shares. We lost $11.49 a share, and so we were down $241 on that one. Okay, so that's Boeing. Somebody's asking the question, is it safe to ride an iron condor to expiration? And it depends on what your definition of safe is. Our rule of thumb on a short vertical is that we always close it out prior to expiration, because there's nothing like thinking there's no way that's going to turn around and go through my strike, and then to have some world event happen or some announcement come out on a particular stock and all of a sudden the stock moves dramatically. And to add insult to injury, if it closes between your strikes and you don't notice it, then the short strike is exercised and the long strike expires. And that's where your max loss now no longer is valid. Yeah, you know what? So CB is saying on the Nvidia trade, we did the 250 wide spread because of the issues with the platform. But in all honesty, even with the extra commissions, we were making more by selling the 250 spread and paying the extra commission than we were making by selling the $5 spread. So, you know, a trader might have said, well, based on just the mathematics, I'd rather do the 250 spread. The downside is that if it goes through your short strike, it has less movement before it's also gone through your long strike and you've earned a max loss. Okay. Hannah, you'll have to go back and watch the recording, because we spent that was the very first trade we did. And because of some system glitches, we spent a long time on it. So here's my ask. As we wrap up, I thank you for joining me. I appreciate your patience through the system hiccups that we had today. We did place several new trades. So we haven't, it looks like the Nvidia trade hasn't filled yet. Oh, let's come over here. It should have filled. So we did the iron condor, the short call vertical and short put vertical on Nvidia. We did a trade on Devon, and we also teed up a trade on EOG, which hasn't quite filled yet, but I'll make sure that that one does get filled. So they're saying they want us to pay more for it. That's okay. We're willing to do that. So hit the like button, subscribe to the channel. Have a great weekend. Get out and hug someone you love, and stay tuned. There's lots of great content still to come today. Thanks, guys, for your help behind the scenes. And thank you guys all for joining. Bye for now.